Hey guys, it's Luron here and welcome back to my channel. Guys, in today's video I want to talk about the overall stock market. Now for the past few months the market has been in a steady decline. As you guys can see here, I'm looking at the SPY. The SPY is down 15% almost year to date, and that's a huge decline in the overall stock market. Now the reason I'm doing this video is because the markets are in a critical, actually it's at the inflection point right now, and in the next couple of weeks, actually next week or so, we'll see whether the market will make a huge move to the downside, because like I said, we're at an inflection point, and is either the market make a move to the upside, because we had the FOMO meeting, the Fed rate announcement last week, and I mean that was expected, the interest rate hikes and all that, but the overall market likes to digest that information about a week or so after, once they really consider all their options. So like I said, in the next week or two we can really see a massive move in overall stock market. So in this video I'll show you guys some key technical levels that you want to pay attention to, because that will determine whether we're reversing or we are continuing to move to the downside. And the reason why it's not 100% certain as to what the market will do exactly, like the big players, the big stock, the FANG stock, your Amazon, Facebook, Google, these stocks, except Google and Tesla, these stocks are down. Like Facebook is down 40+% already. Netflix is down hugely already. So I know those stocks in particular, which are the big drivers for the market, those stocks aren't going much lower. I know that for sure. Amazon, there's some room. Tesla, there's lots of room for Tesla to go down. But like I said, some of the other key players are already down already, so they might be going flat for the most part. But let me show you guys, let me jump into the charts and show you guys exactly what I'm talking about. So here's the SPY. As you can see here with the SPY, we're at that, we're at that 411 level, and the stock is holding. You can see the SPY is holding at that level, but we already got some tails. I like to look at the real body for identifying key levels, but we got some tails here already, which shows weakness, guys. We show a lot of weakness. This was the original triangle that the market would have determined whether the market was breaking higher, but as you notice here on the 22nd of April, the market eclipse, look right here, just broke that line, and then from there we just broke down. We push it back, try to test that line, broke down again, push here again, test. That's when the Fed announced the rate hike earlier this week, and well, that was last week, and then the market just failed again. So multiple tests. This was one support, now it's resistance, 1, 2, 3 times tested there. So I see nothing but to the downside. Maybe they'll try a bounce again, but it'll just be a dead cat bounce, just to move lower. So watch out for that, guys. Let me show you the SPX, which is what tracks the S&P 500 as well. This one is already making lower lows. Look here, guys, low, lower low, lower low. When you got lower lows, and then look the highs, lower highs, lower highs. So this market is just going zigzag down. You got the crossover here. I don't know if you guys can see it. My lines are kind of faint, but you got the 50 moving average crossing over the 200 moving average, which means that's a dead cross, guys. So the market is going down. Now, in terms of levels where I think the market can go to, the pandemic level, pre-pandemic level, the SPY was at 340. Wherever you're looking at the overall SPX, we're talking about 3,400. But I like to look at the SPY. So I think the market could come back and test these levels, the pre-pandemic levels, because a lot of the big names of stocks that sold off, they're back to pre-pandemic levels. And for that reason, I believe that's where the downside lies for the overall stock market, at least the S&P 500. I can see this moving all the way back down to 340. That would mean that we have an overall sell-off of 30%, guys. That would be a 30% crash if we should look at that 340 level. So like I said, this is your key level right now, 410, 411. Once the SPY breaks that level, guys, it's downhill. I mean, I don't see any major support level other than, you know, that 340, even below 340, but I can see it holding at 340. Everything else above that, there's nothing key. There's no major level above. There's a gap here right at 400. So maybe it goes, fill that gap, and then we get a bounce in the overall market. I'm not sure. But that's it for the SPY, guys. The SPY and the SPX. They were, like I said, they're all making lower lows, lower highs. And we have a dead cross in the moving average. The Dow is still holding, you know, making lower lows, lower highs, but we still got this key level on the Dow that we got to break. We still got this key level here at 32,290. This would be the key level for the Dow Jones Industrial Average. Right, so keep an eye on this level, guys. That will be the level you want to pay keen attention to. There's a major gap to fill right at 28,357 on the Dow. So you want to pay attention to that level as well, 2,900 level. So in the next, like I said, and once the market breaks this level, guys, we're looking about the next, 3 to 6 months just being in a downtrend. It could be 3 months, and then we can see some type of recovery. But yeah, we can be looking at a real bear market. Look at the NASDAQ 100 index, guys. This one is already washing away. Look, we're already down 25% on the NASDAQ 100. So this is mainly technology stocks, and yeah, they're the one taking the majority of the hits due to the COVID run-up that we had. We got a dead cross. We're breaking the key level there already at 12,800, and then we're just moving lower. VIX is your best friend, guys. You want to pay attention to the VIX, because obviously as the VIX goes higher, that's where the market is crashing. When the VIX is low, that's when the market is in a bull market. So let me repeat that again. When you have a bear market, that's when the VIX is usually above 20, and the higher the VIX above 20, the more there's more fear. Because this is the fear index, the VIX. So when investors are fearful and selling like crazy, VIX is usually spiking higher and higher and higher. Look at here, the most recent crash due to COVID, VIX went all the way up to 85, guys. Look at that. In a matter of a couple of weeks, just rallied all the way up to 85. So we're at 30 right now. So we're not at those alarming levels like when we had the COVID-19 crash, but still 30. Like I said, anything above 20 is usually danger zone for the market. The market will behave very irrational, lots of up and down moves, but certainly this is an indication that we're in a bear market with these elevated levels on the VIX. So we want to see the VIX coming down and consolidating lower, not spiking higher into 25, 30 plus. So that's something you want to keep an eye on. Now the other culprit, guys, I want to talk to you guys about is Bitcoin. So look, we had Bitcoin peaking back in November last year at $68,000 per Bitcoin. Now Bitcoin had a key level here, guys. See this sloping line? 1, 2, 3. Back November 5th, earlier this week, actually later this week, Bitcoin broke this key level. So Bitcoin is correlated with the overall stock market. If you guys don't know that, you just learned something. Right now, Bitcoin is correlated with the overall stock market. So this was holding this triangle, and there was potential for it to break out and go to the upside, but it broke down, which is an indication, a clear indication that the overall stock market is going lower as well. Bitcoin, the only level for Bitcoin to save Bitcoin is basically this 32,900 level. Now, if Bitcoin should break this level, the next stop is 29,600. That's the next stop for Bitcoin. So yes, our next key level to watch right now. But like I said, we already broke this triangle, which is bearish, it's bearish sign. We got the dead cross, meaning the 50-day moving average crossing over the 200-day moving average. So that's already weakness. And then we broke this key level on the triangle. Now we're going into a descending triangle, which is another bearish setup technically. And we're watching this key level right now to determine what's next. Yeah, just to show you guys two other plays. This is Amazon Like I said, Amazon broke down key level as well, still barreling down. You know, I don't know how much more this has to go, but I could see it going right at pre-pandemic levels. At 2200 is pre-pandemic level. So we'll see if Amazon touches that pre-pandemic level. Now Tesla, guys, Tesla is one of those stocks that since the pandemic back in 2012, let me show you guys, I think this thing was up 1500% or something like that. Look, 1000%. The peak, look at that, 1500% from the pandemic, guys, back in 2020. So this stock is way up in the stratosphere, I would say, and definitely needs to come back down to earth, because there's nothing at this company. Yeah, they're beating on their revenue, they're beating on their earnings and everything like that, but so is so many other companies, but they're not spared from, you know, the big sell-off. And right now, not Amazon, but Tesla is down 30%. There's a lot more room for this thing to come down, guys. So, and Elon Musk is selling a lot of his Tesla shares as well. So that's another thing that will impact this stock a lot. And I know other investors might be looking to de-risk a little bit on their Tesla holdings. So watch for this one to come down, you know, maybe to that 700 level, do that double bottom, and then maybe some more consolidation. But I wouldn't touch this right now. If you're looking to go long, I wouldn't touch Tesla right now. This is a highly bearish pattern, let's put it that way. So we'll let this one come down, consolidate itself before any move is made. So that's it for this video, guys. I just want to talk to you a little bit about the overall market conditions and some of the things that you need to watch out for. So you want to look at all these indexes that I've talked about here today, and let that help your decision in buying, you know, other stocks. Just some bonus, guys. Let me give you guys some bonus stuff that that I bought. I bought within the last month or so. Some of the stuff that I bought. I got some coin, just some small starter position. I think I bought right around that 125 level, and these are long-term plays in my long-term holding. I got some Coop. This one barreled down here. I think some back in February I bought some. Actually, the position is losing money right now, but I like this stock for the long term, so I'm not worried that it's down a little bit more. And if you look here, this stock never missed on its earnings. See all these green here, guys? Always beating on its earnings. I don't believe it's profitable just yet, but it's beating all of its earnings and revenue. So this is a nice play. The other play that I started to take some position on is also Daku Sign. We sold off massively. I think I bought somewhere here before the earnings. This position is down as well for me, but again, it's a long-term play. I got some Facebook as well. I got some Netflix after this last sell-off. So those are the position. Oh, Roku. I got some Roku as well. I bought Roku back in March. So these are the plays that I start to take positions on, guys, and yeah, they're long-term. In another 6 months to a year, I expect to double my money easily on these plays. Now, if you're looking to buy these now, it's even a better time. Why? Because these stocks are down. Like Roku, for example, is probably down almost 80%. Look at that, 83%. So if you buy a Roku right now, I can tell you in a year's time, this stock will be back up to $300. You'll be doubling your money, no doubt. So that's it for this one, guys. That was some bonus tips I give you guys there with some of the position that I'm long for the long term. And I'll wrap this one up. Guys, if you're new to the channel, please remember to subscribe, smash that like button. It helps with the algorithm. It helps the channel to grow. And until next time, take care, guys.